Hey everyone, welcome back to the Group Option channel. In today's video, we're gonna kick off a series of videos that is about candlestick patterns, something that is really becoming forgotten among all the concepts that traders use. I mean, the retail traders, of course. But I think the candlestick patterns still have a lot of power in them, and if you understand how candles work and how they behave, you will basically understand the micro elements of price action, and you can benefit from them a lot. So today's video, we're gonna start and discuss two candlestick patterns that are known as reversal patterns. Okay, so what I mean by reversal patterns is that when the price is, for example, trending bearish or bullish, and a candle is printed and the trend is completely reversed and it moves in the opposite direction. It can also be a minor pullback. For example, these candles, the hammer or the shooting star, can initiate a pullback, or they can follow a pullback and initiate a new trend and wave in the opposite direction. All right. So when we go forward, and I will show you some examples on the charts, you will better understand what I mean. Right now, let's focus on how these patterns look like, okay? So let's start with the bullish one, the hammer candlestick pattern, which looks like this. It consists of a body that is relatively small and a wick that is at least 2 times the body, okay? This is important. So this is a, ratio, but you can judge with your own eyes. After all, I believe discretion in trading is necessary for retail traders that don't have access to all the data and all the advanced tools that, institutional traders work with, okay? You can see that the wick, I mean the lower wick, and this is important, not the higher one, but the lower one is at least 2 times or I mean significantly taller and larger than the body. And another important thing is that the higher wick should be small or non-existent, all right? And one of the misconceptions is that everyone thinks that the hammer candlestick pattern should be a bullish one, but no, the candle itself might and can be bearish. So what I mean by that is something like this. Okay, again, something like this, but the candle can be bearish or red. So we can replace this candle here. Yeah, this is also a hammer candlestick pattern. Okay, so of course the open of this one will be lower and also this one, but it's still the same. And the same goes for the shooting star pattern, which is the exact opposite of a hammer candlestick pattern, which shows a bearish reversal. So the hammer initiates a bullish reversal and the shooting star initiates a bearish one, okay? So the shooting star mostly forms at a top or a local high, and it's better for it, and it's of higher probability if it forms at a resistance level or a supply zone. And the same goes for the hammer. It shows a bottom or local low, and it's much better and much more probable to initiate a bullish run if it's located at a demand zone, a support level, or even after a liquidity hunt. So for example, consider this line as a liquidity level, and right here below this is a liquidity pool. So a lot of times you will see hammers and shooting stars forming after a sweep of liquidity. So the price has run the liquidity right here and it reverses. But it all starts with a hammer pattern or a shooting star pattern for a bearish reversal. Okay, so now you know how these patterns look like, and remember that also the shooting star pattern can be a bullish candle. I mean, it can be green, but the same format should be applied. Okay, a longer wick than a body, a significantly longer one, and a smaller lower wick. Okay, the higher wick is the bigger one, and the lower wick should be non-existent or really small. So let's move on to the charts and watch how these candlesticks work, and witness some real price action and try to make sense of what we're seeing and identify hammer and shooting star patterns and see how they lead to reversals. All right, so here we are on the 1 hour time frame of the euro dollar. So as you can see, the price has been on a bit bullish trend. And the day I'm gonna focus on will be right here because I'm seeing a lot of hammer candles, okay? So let's start candle by candle. So it's Friday, 27th of June. And as you can see, no candles up until here, okay? So first of all, can you consider this as a hammer candle? No, because this is a doji, and we call it a doji because the body is almost non-existent, okay? But the doji and the hammer almost work the same in certain cases, and this is one of those cases. So if you consider that there's a body here, you can consider this one as a hammer. And as you can see, the wick is many times bigger actually than the body right here. But if you have a problem with that, the next candle is also a good, hammer candle. It's bullish, so it's stronger. I've already shown you how these candles look like, but what do they actually mean? What is the psychology behind them? So, right here, the session has started, and there was some bearish movement. It was actually a bear trap. So, the price didn't continue lower and didn't even take these liquidity pools, and it jumped up, okay, with a strong bullish candle. And then some pullback, as I told you. At the end of a pullback, we're likely to witness a hammer candle or a shooting star. In this case, we're looking at a bullish reversal, a bullish continuation even right here, and we're gonna look for a hammer one. So this and this both could be considered as reversal patterns. So they reverse the pullback and push the price higher. All right. Now, what do they mean? Here we had a pullback, an exhaustion of a trend, okay? And right here in these two candles, we had a doji. So this shows indecisiveness. And the next one, which is our hammer candle, shows that the market opened here in this 1 hour period. The bears took control and wanted to push the price lower, but they failed, and the bulls took over and pushed the price higher. And after a little bit of trading, it closed right here. All right. So this shows bearish exhaustion. So the bears and the sellers were exhausted right here, and the demand came in. Why did the demand came in these two candles, and why did the price push them higher, and even right here? So what is special about this area? We have already talked about fair value gaps or imbalances. Right here, we have a bullish imbalance, okay? So let me extend this. You see that the price has reacted multiple times to this level. This is a bullish fair value gap, and it works like a magnet and also a demand zone. So the price is very likely to return to these fair value gaps, but it's also very likely to hold and push the price higher. So our hammer candle right here has formed at a demand zone. So it makes it high probability. So you can enter right here, or you can enter on the next candle when you see that the momentum is not fading and the price is at least not bearish. Here we're again indecisive, but you could have entered here or even here. And why here? Because the price once again attacked the fair value gap, and then the bulls again took over and pushed the price higher back to the open. Okay, this is also a hammer candle. It's a bearish one. It might not be as strong as this one, but it has haunted the liquidity below these candles and is inside the fair value gap and has filled all the fair value gap and pushed back inside it and closed inside it. So there's a lot of confluence right here. And you can put your stop loss here. So it's a much tighter stop loss. So a tighter stop loss for a bigger risk reward ratio. So for example, if you target this high, you will capture 2.5 already, and you could have held it much longer. So if you're targeting a fixed risk reward ratio, you could have called a 3, a 4, a 5, or even a 6 risk reward ratio, which is crazy, just with this candlestick pattern, but also confluence. So what we use right here is market structure. We're in a bullish trend, a fair value gap, a liquidity hunt, and the formation of a hammer candle. So candlestick patterns can be used with other concepts. So it doesn't mean that you should be a candlestick pattern trader only to use them. If you know ICT concepts and you subscribe to them, or if you even use trend lines. So for example, right here, we have a trend line, a beautiful trend line that has held for multiple times. And on the last touch, right here, we see the hammer forming. So these candlestick patterns could be used with a lot of different concepts. And now that you have seen the hammer candle, let's show you a shooting star, which is the exact opposite. And right here, I can see my shooting star pattern. So once again, a higher wick larger than the body, significantly larger, and it's a bearish one, so it's already very strong, and it has formed after a sweep of liquidity. So all the liquidity above this high has been swept, and you can see with these long wicks that the sellers have been trying to take control, and they have done so in this candle. So the buyers pushed the price higher, they got rejected. They pushed the price higher, they got rejected. And this is significant because above this high, there's a lot of buy side liquidity. So there's a lot of buy orders. And when they can push the price higher and all these large wicks form and sellers take over, even with all these buy orders being executed, it shows you real intent by the smart money and the sellers to push the price lower. So after the formation of this candle, you could have entered, or you could have waited for the next significant large candle, and you can put the stop loss above the high again and target right here for 1.4, or even you can target the low or the midpoint of this order block. If you don't know about ICT order blocks, we have videos about them. Check out our channel. Or what I mostly use in this situation, when I see already two large wicks, and with this one is three, piercing through this liquidity pool, I will enter right here. I will not wait, and again put my stop loss above the high and target the nearest low, so the low hanging fruit. It gives us a 2.3, so it's a quick one, not for most day traders, so it's almost 8 hours, but for swing traders who stick to 1 hour time frames and higher, this is a really quick and great catch for 2.3. So here we had a hammer candle, here we have a shooting star candle, and you saw on both instances how these candles can show us reversals. But also remember, this doesn't always materialize, okay? These candles don't always work. And so one of the instances is for example, right here, this looks like a shooting star pattern, but it's not, because the trend right here is already bearish, okay? So the shooting star should be formed at the end of a bullish wave, okay, right here. But this one, we have already a corrective bearish trend. So this is not a shooting star pattern, okay? This one is, this is not, all right? And the same goes for a hammer candle. So for example, you can consider this one as a hammer, but it's already at the end or, after a bullish trend. So this cannot be considered as a reversal pattern. I hope you liked this video and it added value and some tools to your arsenal. So for example, if you're an ICT trader or any other concept, you can use candlestick patterns to read the charts, and it really helps you to understand what's going on. And the psychology behind the candles is the psychology of the market. So it can always be helpful to read what's going on in the market and what the masses and what the smart money are doing. All right. So if you like the video, please subscribe and of course push the like button, and also turn on the notification bell so you'll be notified anytime we publish another video. The next video will be coming soon, and it's again about another candlestick pattern, and we will move on with this series, and we will have I think 4, 5, 6, I don't know how long it will take, but we're aiming to cover all the relevant and all the important candlestick patterns to help you all trade better and make better decisions. And it doesn't matter if you're a crypto trader, forex trader, or even a binary options trader, you can apply these concepts and candlesticks to all these asset classes. Wherever is a candle, there can be found a pattern. Okay, thank you and see you next time.